Yeah, welcome to the chat. In life, no one can play God because God determines who lives and who dies. But in this $8 trillion market where money controls everything, the dominant market participants with the largest sum of money in the market, they determine who profits and who loses. So, to make profits and to make losses are all at the will of the market maker. Yet still, the market maker can never and will never determine which day he must make some traders make profit and which day he must make some traders make losses. Why is this? The market is unpredictable because human behavior shapes where orders are placed. Let us take for instance, right here we have the New York session, and you can see from this zone, technically price is in an uptrend. We can see a high, a higher high, a lower high, a higher high. So what happens right here? Why did the trend shift to the downside? Who knows? So for instance, after the New York close and the Asian opens right here, what happens behind the scene? Now we need to know what happens behind the scene in the market. Unlike the stock where there is a central exchange where you can see where the big orders are, where the big money flow is, the forex market is a decentralized market, and only the brokers have the data of where traders place their orders. So what happens? They have a synergy. So the market makers in Asia, they call the market makers in New York to ask them where has the majority of orders been placed. So right here, majority of orders are short. We have a lot of traders shorting the New York market. They are placing lots of sell orders here, and their orders have been activated. So they give the information to the market makers in Asia during the Asian Open. The market makers in Asia, what do? They confirm more on the bias of the traders in the New York session. These naive traders, they confirm their bias more and they pull this trend lower. So what happens at the London Open? The market makers in London, they call the market makers in Asia. Oh, lots of orders have been placed for sale. Lots of orders have been placed for sale, and those that sold during the New York, where will they put their stops? If you're an experienced trader, you should know that their stops will be in the eye of the day. And those that sold during Asia, where will they put their stops? Their stops will be in the eye of the day, this blue line. So this is where they put their stops. So the market maker does not determine where people put their stop, and it does not determine if lots of money will be on the sell side or the buy side. But here probably on Euro USD, we are most likely having 500, 800 million dollars placed here, 800, 900 million dollars placed here, and those that place their buy order here, probably we are having 400 million or 300 million, which is lower compared to the sell orders. So they have to eat the sell order first. They have to take money away from the sellers. So once they take money away from the sellers, most likely those that bought here, if you are not greedy and maybe you place your take profit here at this zone, take profit could have been hit. Otherwise, the buyers here, after they took money away from the sellers buying up, then they came down and stopped out the buyers. The buyers in this zone, where did they place their order? Here. Then they stopped them out. And after stopping them out, they call the market makers in New York. The market makers in New York, they call the market makers from London, and those ones have given them their information that there are still lots of buyers here that are strong, that have placed their orders in the low of the day. So most likely, maybe we have $900 million here of billions of dollars here. Then what happens at the market open? You can see in New York they sold down, in Asia they sold down, and they came to stop the traders here out. So the market maker does not determine where most of the money is, but wherever the money is, what does it do? It makes technicals play out. You can see the engulfing patterns that we see on the chart, the railroad track, the EMA cross and everything. They all signify the volume and the direction of where price to go. They are not cast in stone. They are not cast in stone. So the fact that you have backtested a strategy works perfectly fine. Whenever it works, it does not mean that that pattern directly influences the fact that it has to go your way. That is why the market is unpredictable. So regardless if it is a downtrend, regardless if it is an uptrend, regardless if it is a choppy market, price does whatever it wants, because price is at the will of who? The will of the market maker. You can see right here, price is what? Price is in a clear uptrend. So what happens here? You can see this is a downtrend, and the market makers in Asia, they call the market makers in New York, and most likely what do we have here? We have most money in the low. You can see this is the low of New York. Let's mark it. We have most money in the low of New York, and once price opens, you can see they are still confirming the buyers of these buyers that have most money, and you see more buyers coming in. Then what happens later? Price comes and stops them out, and the trend shifts. And even the buyers on this particular day, you can see what happens later. Price went their way, but before price went their way, where we had most money, and the reason why price did not break this low is because there are still lots of sellers here, and the market maker does not want to release them. That's why price is going up. It does not want to release them, so their stop loss have to be hit. They have to be totally liquidated, and that is why you must always trade with a stop loss, because that is the only thing that secures current profit and future profit. So following from this, if you have followed us well, you will know the reason why the market is unpredictable. So you can see on Euro USD, you can see the high of Thursday taken out. Why is this? Because we have most sellers with the most money, not the buyers. The money of the buyers is not as much as the money of the sellers, so the market has to go and stop them out. So the market maker does not care about the buyers that will make a profit here. He cares about stopping the sellers in this zone out, because here there was a breakout which signified a trend continuation. So we have more sellers that have already scaled in, and the market needs to go back to stop them out. Plan your trade, trade your plan, and most importantly, manage your risk and emotions.